So is a California insurance crisis stopping you from buying a home in 2026? If you've heard that State Farm, Allstate, and others are leaving the state, you might be worried about finding coverage. But here's the secret most buyers miss. New construction homes are actually your safety net. So in this video, I'm going to break down why insurance companies actually prefer new homes over resale homes and how you can use this Hardened Home standard to secure coverage when others can't. So if you've been watching the news in California, you've seen the headlines. State Farm is out or pausing new policies. Allstate is pulling back. Premiums are skyrocketing. It feels like the entire state is becoming uninsurable. And if you're thinking about buying a new home, you may be pretty worried. But here's a contradiction that most buyers miss. Buying a brand new home is actually your cheat code to beating this insurance crisis. In fact, it might be the safest way to get coverage in 2026. However, there is one massive financial trap waiting for you at the home builder sales office that could cost you an extra $500 to $1,000 a month if you don't know how to spot it. So in this video, I'm going to show you exactly why new homes are winning the insurance game, and I'm going to teach you the safety net strategy, the specific method that I use with my clients to make sure that they get covered without getting ripped off. I am Steve Vention, your Southern California new construction home expert. And every week I talk with folks just like you about how to buy new construction homes the right way with less stress and more savings. So before we dive in, some quick legal housekeeping. I am your real estate expert, not an insurance broker. I help you navigate the process of home buying and the negotiation. But for the actual insurance policy specifics and insurance coverage options, I always defer to licensed insurance professionals. All right, now let's look at why the old home market is struggling so much right now. To understand the opportunity with new homes, you have to understand the risk with old homes. If you fall in love with like a charming home in the foothills built in the 1980s, you are walking into a potential difficult situation. Insurance companies use something called a fire line score. They look at that older home and they see risk. It has open eaves where embers can fly in. It has single or older double pane windows that shatter in heat. It has older vents that don't block flaming debris. So in the eyes of an insurer, that house is high risk. And I've seen deals for existing or resale homes fall apart because the buyer simply couldn't find an insurance policy or the quote came back at some nuts number like $10,000 a year. But new construction is different. And in a minute, I'm going to show you the specific safety net that protects you from this exact nightmare. So stick with me here. So why is new construction the cheat code? So it really comes down to two words: hardened home. Every new home in California is built to the strictest Wildfire Urban Interface codes. They have internal sprinklers. Every room has them. This is a massive safety feature that was not included in older homes. They also have fire-resistant materials. So we're talking concrete tile roofs and stucco or stone veneers, not wood siding. The homes are very difficult to catch fire from the outside. They also have ember-resistant vents. So this is a huge one. Most houses don't burn down from the outside, from a wall of flame. They burn down because embers fly into the attic vents and the homes combust from within. New homes have special vents designed to prevent that. And also fire-hardened landscape. So many new communities are using landscape techniques and plant materials that are more fire resistant to guard against the fire spreading through a community. So insurance carriers want lower risk policies on their books. So while they're saying no to that 1970s home, they're often saying yes to the 2025 new home. But even with these new home safety features, location still matters. You can have the safest house in the world, but if it's in a very high fire hazard severity zone, you still need a strategy and insurance options may still be limited. So if you're looking at specific new communities in Southern California and you're worried about the fire line score, this is where you need a plan. Book a new construction strategy call with me. We can look at the specific developments you're interested in, check the fire maps, and see if that builder has a known history of insurance issues. So there's a link down in the video description. You can book a time right on my calendar. Okay, so let's talk about this safety net strategy. When you sign a contract with a big home builder like Toll Brothers, Pulte, etc., they almost always have an affiliated insurance agency. And they'll tell you, if you use our insurance, we guarantee you can close on time. And that's your safety net. It is valuable. It means your deposit is safe. It means you won't lose your interest rate lock because of an insurance delay. But here's the trap. Just because it's guaranteed doesn't mean it's cheap. And I often see builder-affiliated brokers offer a policy that is significantly more expensive than what's available on the open market. They know you're stressed. They know you just want to close. So they give you a policy that might be $4,000, $6,000 or more per year. So here is the process I suggest my clients work through. First, secure the backup. We get the builder's insurance quote. That's our safety net. Next, we shop the market. I'll introduce you to an insurance broker I work with who has helped my clients with new homes. Or if you're eligible for USAA, that's one of the first places you should be calling. And third is the swap. If the other broker finds a policy for $2,000 and the builder quoted $7,000, well, we swap them out. You keep the safety of the builder's policy just in case, but you end up paying the price of a standard policy, and that's how you win. Now, one important thing to consider, your insurance cost factors into your mortgage application. So if the lender is approving you based on the builder's insurance quote, that could be a problem if that policy is really expensive. Also, there is no contingency period with new homes, which is important to know. So the timeline matters. We want to get those insurance details firmed up before we make an offer on the home and before the lender does their final approval. I never want a client to leave insurance to the last minute and then find their options are limited. So bottom line is this, don't let the headlines scare you out of the market. The insurance crisis is real, but it is hitting older homes much harder than it is hitting newer ones. You just need to be an educated buyer. So to help you with all the differences about new construction homes, I put together a new construction buyer's guide, and you can download that for free using the link in the description below. So I hope this information has been helpful. Remember, my contact information is up on the screen right here. So please reach out, call me, text me, or send me an email if you have any questions about buying a new construction home. So thank you for watching, and we will see you on the next video.